Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hammond, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Incorporated, a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're kicking things off with some significant news about the Toronto area housing market. According to a recent report by the Toronto Regional Real Estate Board, the average home price in the Toronto area has continued to decline. In August, the average price dropped for the seventh consecutive year-over-year decline, with detached homes experiencing a notable 10% decrease.
That's quite a drop, Steve. It seems like buyers in the Toronto area are starting to have more negotiating power with the increased choice available to them. It's definitely a shift from the frenzy we saw a few years ago.
Absolutely, Janine. The market dynamics are changing, and this shift is providing more opportunities for buyers to negotiate on price and conditions, such as home inspections and longer closing periods. It's a buyer's market right now, especially with the sales to new listing ratio sitting at 37%, which is below the 40% threshold typically associated with a buyer's market.
And while it's great for buyers, it's a challenging time for sellers, particularly those trying to offload detached homes. The 10% drop in prices for these properties is significant, and it's the largest decline among all property types.
That's right. Detached homes have seen the biggest decrease, followed by semi-detached homes at 6% and condos at 2%. Interestingly, townhomes have bucked the trend with a 1% increase in average price. It seems that the affordability of townhomes might be attracting more buyers.
It's a reminder of how diverse the real estate market can be, with different property types reacting differently to market pressures. For many first-time buyers, semi-detached homes offer a more realistic entry point, and that's reflected in the nearly 18% increase in sales for that category.
Indeed, Janine. It's a tough market for those earning an average income in the Greater Toronto area, as the monthly carrying costs of a mortgage remain high, even with lower borrowing costs and selling prices over the past year.
And with the Bank of Canada holding its key interest rate steady at 2.75%, there's a lot of discussion about the potential for rate cuts to help ease the burden on buyers and stimulate the housing market.
Exactly. Rate cuts could provide much-needed relief to buyers on the margins and potentially drive economic growth by boosting the housing sector. But as always, we'll have to wait and see how the market responds. Our next topic is the concerning state of Toronto's condominium market, which, according to Federal Housing Minister Gregor Robertson, is in a nosedive. Robertson recently shared his thoughts with the Toronto Star, stating that there is far too much condo inventory in both Toronto and Vancouver, and this overbuilding has led to a significant downturn in sales.
It's definitely a challenging situation for condo sellers, Steve. The market correction that Robertson refers to has been anticipated for some time, and it seems like we're finally seeing the impact of years of overbuilding. This is particularly tough for those who invested in condos expecting a steady appreciation.
Absolutely, Janine. Robertson's remarks highlight a long-anticipated correction in the market. Many experts had predicted that the housing bubble would eventually burst, and it appears we're witnessing that now. With a glut of new supply and sliding demand, prices are dropping significantly.
And it's not just about the numbers, Steve. This downturn affects people's lives and their financial security. Many condo owners might find themselves in a difficult position, especially if they bought at the market's peak with the expectation of price growth.
Right, Janine. Joel Fox from Oversight noted that even if interest rates align with expectations, it might not be enough to stabilize the market. Prices need to reach a point where they make sense for potential buyers, and we haven't hit that equilibrium yet.
It's a tough balancing act, Steve. While developers are calling for relief measures, Robertson isn't looking to repeal the foreign buyer ban or offer tax breaks for new builds just yet. He's taking a cautious approach, which might be necessary to avoid further market distortions.
Indeed, Janine, the data is quite stark. According to Altus Group, sales in the Greater Toronto Area were down 48% from last year and 82% below the 10-year average. Edward Jegg from Altus even compared this downturn to the severe market slump in the early 1990s.
It's a reminder that real estate markets can be quite volatile, Steve. For now, it seems like patience and strategic planning are key for both buyers and sellers in navigating these turbulent times.
In August, the Greater Toronto Area saw a notable decline in home sales, highlighting a stalling recovery in the housing market. According to a recent report, sales were down 5.3% compared to July, marking a slowdown after a brief period of recovery earlier in the summer. This decline is a signal that the market is facing challenges, despite some earlier signs of stabilization.
It's definitely a concerning trend, Steve. For many potential buyers and sellers, this downturn can create uncertainty and stress. People who were hoping for a more robust recovery might be left wondering when we'll see more consistent positive movement in the market.
Right, Janine. The numbers tell a story of a market that is still trying to find its footing. The Toronto Regional Real Estate Board pointed out that new listings were also down by 2.8%, which suggests that sellers might be hesitant to enter the market amid unclear conditions. This hesitation can contribute to the slower pace of sales.
And for those already in the market, whether buying or selling, these fluctuations can be stressful. It's important for individuals and families to have a clear understanding of their financial situation and future goals to navigate these uncertain times effectively.
Absolutely, Janine. The sales to new listings ratio, which provides an indication of market balance, was 50% in August. While this is still considered balanced, it's lower than the 55% recorded in July. A lower ratio can indicate a shift towards a buyer's market, where buyers have more leverage in negotiations.
That's a key point, Steve. For buyers, this could present an opportunity to take advantage of the current market conditions to negotiate better deals. However, it's crucial to approach these decisions with a long-term perspective, especially given the volatility we've seen in recent months.
Exactly, Janine. And while the market is seeing some challenges, it's also important to note that these fluctuations are part of the natural cycle of real estate. For those looking to invest or purchase a home, staying informed and seeking professional guidance can make a significant difference.
Absolutely, Steve. It's all about being prepared and making informed decisions. With the right approach, even in a stalling market, there are opportunities to be found. And for those in the market, whether buying or selling, patience and strategy will be key in the coming months.
In August, the Greater Toronto Area experienced a notable uptick in both home sales and new listings, according to the Toronto Regional Real Estate Board. This is a positive change on a year-over-year basis, with a 2.3% increase in home sales and a 9.4% rise in new listings compared to August 2024.
That's encouraging news, Steve. It seems like the increased inventory is giving buyers more options, which is always a good thing. However, the elevated choice is also leading to negotiations that drive down average selling prices.
Exactly, Janine. The average selling price in August was $1,022,143, which is down by 5.2% compared to the previous year. This decline in prices, coupled with more listings, indicates a market where buyers have more leverage.
It's a challenging balance, Steve. While lower prices can be appealing for buyers, they also reflect the economic pressures many households are facing. Even with reduced borrowing costs, affording a home in the GTA remains tough for families earning average incomes.
Indeed, Janine. Chareb President Alekia Berry-Sproul noted that with the economy slowing and inflation under control, further interest rate cuts by the Bank of Canada could help offset the impact of tariffs and improve affordability. This could support more home sales and stimulate significant economic spin-off benefits.
That's an interesting point, Steve. It highlights how interconnected housing is with the broader economy. TRREB Chief Information Officer Jason Mercer also mentioned that new large-scale infrastructure projects could be vital for Canada's economic sustainability in the medium to long term.
Absolutely, Janine. In the short term, however, spurring consumer spending on large ticket items like housing could drive recovery, as it has in previous economic cycles, according to Taribi Chief Executive Officer John DeMichel. It's a strategy that could help stabilize the market while we wait for these longer-term projects to take effect.
It seems patience and strategic planning are crucial during these times, Steve. For now, buyers and sellers need to stay informed and work with professionals to navigate the current landscape effectively.
While the Greater Toronto Area housing market is showing some signs of recovery, it's clear that the path to stability is still fragile. Recent data from the Toronto Regional Real Estate Board indicates that home sales in August were up 2.3% compared to the same month last year. This uptick comes on the heels of a notable 10.9% increase in July, marking the highest sales for that month since 2021.
It's encouraging to see those numbers, Steve. However, it's important to remember that on a seasonally adjusted basis, sales actually dipped by 15.7% from July to August. It seems like the market is still trying to find its footing amid economic uncertainties.
Absolutely, Janine. The period from January to June this year was notably weaker compared to last year, largely due to the economic uncertainty stemming from United States tariff policies. However, the gains made over the last 2 months are promising, suggesting that we might have reached the bottom of the cycle.
That's a hopeful outlook, Steve. Kaylee Heaps from the Heaps Estrin real estate team mentioned that we might see a slow but steady climb from here, with incremental progress rather than dramatic swings. It's a reminder that patience is key for both buyers and sellers right now.
Exactly, Janine. TREB's president, Alekia Berry-Sproul, highlighted the need for further interest rate cuts to support this recovery. She suggests that with the economy slowing and inflation under control, additional rate cuts by the Bank of Canada could offset the impacts of tariffs and enhance affordability, which in turn could boost home sales and generate significant economic benefits.
That makes sense, Steve. While interest rates have come down from 5% to 2.75% since June 2024, and home prices have fallen, affordability is still a major hurdle for many, especially those earning an average income in the Greater Toronto Area. TREB's Jason Mercer echoed the need for further interest rate cuts to truly make a difference.
Indeed, Janine. Even though borrowing costs and selling prices have decreased, the challenge remains significant for many households. The good news is that active listings have been piling up, creating a buyer's market for those who have the means to make a deal. In August, there were 27,495 active listings, up 22.4% from last year.
It's a double-edged sword, Steve. While the increase in listings provides more options for buyers, it also reflects a saturated market that might be causing sellers to hold off until conditions improve. Kaylee Heaps believes this strategic patience could eventually help stabilize the market as existing inventory is absorbed.
That's a valid point, Janine. As we look ahead, Heaps predicts that listings will slow down over the next few months, which could help balance supply and demand. This, combined with families settling into back-to-school routines and banks offering promotional mortgage rates, could drive an uptick in buyer activity.
Absolutely, Steve. These factors could indeed spark momentum in the market. As always, staying informed and working closely with professionals will be crucial for navigating these challenging times effectively.
Janine, it's interesting to note that despite the cooling of Canada's housing market, the system remains robust, largely due to strong underwriting standards that have been in place since 2012. This was highlighted by Peter Routledge, the superintendent of the Office of the Superintendent of Financial Institutions, during the Scotiabank Financial Summit.
Yes, Steve, those underwriting standards are crucial for maintaining stability. Routledge mentioned that these standards have helped keep mortgage delinquencies and credit losses near all-time lows, which is comforting news for both lenders and homeowners.
Exactly, Janine. Routledge pointed out that about 25% of listings are being pulled from the market, which indicates that sellers are not over-leveraged. They can afford to hold on to their properties without reducing prices drastically.
That's a positive sign, Steve. It suggests that many homeowners are in a stable position and not forced to sell at a loss. This stability could offer some reassurance during these uncertain times, especially for those worried about the condo market in cities like Toronto and Vancouver.
Indeed, Janine. While there is excess supply and prices are coming down from their peaks, Routledge noted that this isn't necessarily negative for everyone. Lower prices could improve access for younger Canadians looking to enter the housing market.
That's true, Steve. Condos often serve as starter homes for younger buyers, and more affordable prices can make home ownership a reality for them sooner rather than later. It's a reminder that market adjustments can sometimes bring opportunities.
And if there were a more significant downturn, Routledge reassures us that there's ample capital to absorb any potential shocks, making it manageable for households and financial institutions alike.
It's good to hear that there's a safety net in place, Steve. Having that buffer can provide a sense of security for everyone involved, from homeowners to lenders.
Speaking of buffers, Routledge also talked about the domestic stability buffer set at 3.5%, which is on top of the global Basel III minimum. This ensures that Canadian banks are well capitalized, with most major banks sitting comfortably above the minimum requirements.
That's reassuring, Steve. It shows a level of prudence and foresight from the bank's boards and executives. Having a strong capital base is essential for weathering any financial storms that might arise.
Absolutely, Janine. Routledge mentioned that improvements in household debt metrics could lead to a reduction in this buffer, which would be a positive development for the economy.
Yes, and it's interesting how he noted that profitability and earnings play a role in these decisions. If banks are performing well, it could lead to better stress test results and potentially lower capital requirements.
It's a complex balance, Janine. While current stress tests justify the 3.5% buffer, it's clear that OSFI is keeping a close eye on economic indicators to make informed decisions.
Definitely, Steve. And it's important that these decisions are made carefully, especially when it comes to credit unions and their role in providing Canadians with financial options. Routledge highlighted the importance of ensuring these institutions can operate smoothly under federal oversight.
Right, Janine. He pointed to Quebec's credit union system as a model for success. It shows that with the right structure, credit unions can be a vital part of the financial landscape, providing competition and choice.
It's encouraging to see these examples, Steve. It reminds us that there are different ways to achieve financial stability and growth, each suited to the unique needs of communities.
And as we consider the broader lending landscape, Routledge suggested that a bit more exposure to commercial lending could be beneficial for both banks and the country, given the lower risk weights for residential mortgages.
That's an interesting point, Steve. Diversifying lending practices could indeed strengthen financial institutions and provide a more balanced risk portfolio.
Lastly, Routledge touched on the role of non-regulated lenders, reminding us that while they take higher risks for higher returns, it's crucial to monitor any potential spillovers into the regulated system.
It's a delicate balance, Steve. Ensuring stability in the financial system requires constant vigilance and thoughtful regulation to protect all stakeholders involved.
Janine, with the Bank of Canada indicating that about 60% of Canadian mortgage holders renewing this year and next will face payment increases, it's crucial for homeowners to start planning early. According to Leah Zlatkin, a licensed broker and expert at lowestrates.ca, waiting for a renewal letter could lead to a significant shock as options become limited.
That's a really important point, Steve. The thought of waiting until the last minute can be daunting for many homeowners. Planning 4 to 6 months in advance, as Zlatkin suggests, could make a tremendous difference. It allows homeowners to evaluate worst-case scenarios and gather necessary documentation, which can ease the stress of renewal.
Absolutely, Janine. The Bank of Canada's recent analysis highlights that borrowers renewing their mortgages will see their debt service ratios increase by a median of 2.7 percentage points. However, Zlatkin notes that there are strategies to manage these higher payments, such as extending the amortization period by 5 years or tapping into home equity lines of credit.
And it's good to know that many homeowners have built up equity, which can be a valuable resource during these times. It reminds us of the importance of consulting with mortgage professionals early. They can provide insights and strategies that might not be immediately apparent to homeowners facing these challenges.
Right, Janine. The Bank of Canada also points out that most borrowers should face interest rates below their original stress test levels. This is somewhat reassuring because it suggests that while payments might increase, they won't necessarily be unmanageable for everyone.
Exactly, Steve. And with potential income growth since the origination or previous renewal, some homeowners might find additional relief. It's about understanding one's financial situation and making informed decisions. Homeowners shouldn't assume they'll automatically qualify for the same terms as before, especially in a changing rate environment.
Indeed, Janine. Zlatkin emphasizes the importance of not waiting too long and consulting with professionals. The upcoming renewals, while challenging for some, are not expected to cause severe financial stress for most. It's a matter of being proactive and prepared.
That's right, Steve. It's about being strategic and understanding the options available. By taking the time to plan and consult professionals, homeowners can navigate these renewals more effectively and avoid any unnecessary surprises.
Now, Janine, let's turn our attention to a pressing issue raised by the Ontario Real Estate Association, or OREA, which is calling on the provincial government to implement independent oversight over the Real Estate Council of Ontario, known as RECO. This call for reform emphasizes the need for stronger consumer protection and increased regulatory transparency.
That's right, Steve. OREA has been advocating for this change since the government began reviewing the Real Estate and Business Brokers Act back in 2017. The association, representing nearly 100,000 realtors across Ontario, believes that consumer deposits must be safeguarded and that trust in our real estate regulator is paramount.
Exactly, Janine. OREA's push for independent oversight through the Ontario Ombudsman is gaining momentum, with support from the majority of local real estate boards across the province. This collective call to action is a testament to the importance of consumer protection in our industry.
It's heartening to see such strong advocacy for consumer rights, Steve. The message from OREA is clear. Trust accounts are inviolable, and consumer protection cannot be compromised. By bringing RECO under the oversight of an independent body, OREA hopes to ensure accountability and integrity in real estate transactions.
Kathy Poland, the 2025 OREA president, has been vocal about the need for these reforms, emphasizing that Ontario deserves action. She argues that with nearly every corner of the province's realtors, backing this initiative, the government will be compelled to listen and act.
Absolutely, Steve. It's about ensuring that consumers feel confident their life savings are protected when engaging in real estate transactions. With the backing of OREA's largest member boards, this movement for reform is gaining significant traction.
The call for reform comes as part of OREA's push for the government to move forward with TRESA Phase 3, which aims to enhance the regulatory framework governing real estate transactions. This includes independent oversight of RECO to ensure the highest standards of accountability.
And it's not just about the structural changes, Steve. It's about building trust and ensuring that both consumers and realtors have faith in the system. With these reforms, OREA hopes to restore and strengthen that trust.
Well, Janine, it's clear that the call for reform is resonating across the province. As OREA continues to push for these changes, we'll be keeping a close eye on how the government responds to this significant demand for increased oversight and consumer protection.
It's a crucial development to follow, Steve. Ensuring that Ontario's real estate market remains transparent and secure is vital for everyone involved. Let's hope these efforts lead to meaningful change.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, Their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ka to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.